Hi, this is Tom Bacharach and Tamara Middleton from RMC. We are here to talk to you about all things 401k. And what we've realized just in a conversation that we were having with earlier today, there's so much that people don't know about 401ks. I mean, 401ks have been around since, 1978?
Yes. They actually became more in favor in the late 80s. So, but what people don't understand about 401ks, particularly since Secure 2.0 passed back in December of 2022, is, in many states, there's similar types of plans that are being required, but we have new tax incentives. So 401ks don't have to cost employers anything. They actually can have tax credits for establishing them.
Well, that was one of the things that you blew me away with earlier. I didn't realize that with Secure 2.0, that if you put in, $1,000? Just $1,000 for an employee, that the tax credits would actually mean that there would be no net cost?
Absolutely, and creating the plan usually has been the biggest obstacle for employers because they look at creation of trust and all the work that goes along with that. It's so expensive. But with Secure 2.0 tax credits beginning this year, you can get a tax credit to establish the plan up to $5,000. Normal cost to establish a plan and get things going, usually is around $2,500. So 100% of the cost to set it up is going to be paid for by Uncle Sam. And then when you make a contribution for them, 100% of the contribution, if the employee makes less than $100,000, including themselves, could be a direct tax offset as well. So now granted, the business would need to be making a profit.
Sure.
But if they're not, they do still get the tax deduction for those contributions. So it's a win-win for everyone. Our employees that make the least amount of money, if they make less than roughly $70,000 a year, on top of getting contribution, now a new benefit as we're trying to attract and retain employees, getting that profit sharing contribution for $1,000. If they put money in themselves, which is what we do in a 401k, they'll qualify for a tax credit on top of getting the contributions. It's like getting the contribution from their employer and a match from Uncle Sam.
Wait. So if I'm making less than, $43,000 as an individual,
yeah.
And then how much is it for a married couple?
Double that. So
okay.
Yeah.
So roughly $80,000.
Yeah.
I get the deductions and the need for the retirement planning, but I also get another tax offset.
And there's a savers credit that allows you to get a credit for the contributions that you make up to 50%. There's a dollar cap, of course, on top of that, and that's adjusted every year for inflation, but it's almost getting like an extra match on top of the money that my employer's giving for me.
See, that's really incredible information, because one of the things that I'm sure you see, I know I see on a daily basis, is employers want to do something, they just don't want to do something for their employees. And you've taken that kind of thought process and said, not only are you going to get something as an employer, that $1,000 tax offset that'll help subsidize that plan, but also you can, and we should be telling every human resource person out there about what you can do for your lower paid employees, because that's going to increase, hopefully, the percentage of employees that don't currently pay. They can get another advantage.
And the fact that if the contribution to the plan that each employee can get, if it's not a requirement for them to put money in themselves, many of them don't have or don't feel they have discretionary income that they can save. But if you could encourage them to save just a little bit, even if it's $5-10 a week, then they will be eligible for the tax credit. The match that you're making for them will be eligible for a tax credit. And the plan you establish to make this all happen can be paid for as well with the tax credit. It's a win-win for everyone.
That really is. And so, wow, that's exciting. All right, so what I'd like to do at this point is thank you, Tamara. That was incredibly valuable. And we will be back with more things about 401ks we didn't know in an upcoming podcast.
Thanks for watching. Please like and subscribe to see more videos like this one.